How on earth do you estimate your tax bill in the middle of the year? Great question, and it's something that Louise and I will share with you in this video. How do I estimate what my property tax bill is likely to be, as it always comes as a shock when my accountant works out?
Oh no, Mimi, that's not what we want for you.
Now, Mimi or Memi? Memi is typically with a
Mimi.
H, isn't it? So Mimi, I'm going to give you Mimi. So the thing I would say to anyone watching this, it's a bit like this. What? Okay, this is me. Okay, I've got, you can just see my hands here. Bit of a high. I'm in a car and the steering wheel's just above me. You see some
very
older
low.
You see
low.
some older people when they drive like that, don't you? That's me like this now. The reason why I'm doing that is if you're driving a car, you have dials that help you. So you have your speedometer, you have your fuel gauge, you have your sat nav, you know where you're going in life. Now, anyone, and maybe this is not aimed at anyone in particular, but it's just a general thing in life. What you measure gets done. What you measure, you achieve. So if it comes as a shock, maybe work with your accountant to use things like Xero, QuickBooks to understand, well, month by month, how much money you are making. Because if you're making a profit, then that should be easy enough for you to say, well, how much tax do I need to accrue all the way through the year? You are in control. And actually, you don't need your accountant to tell you the tax liability. You should know before they've done it. And actually, I always think it is better, and I know you're not an accountant, maybe, and I'm not going to suggest anyone should be, but I do feel that checking what your accountant has done, and you might say, well, I'm paying them, they're a professional, they should do it right. But we're all humans, and someone might make a mistake, miss a cost off.
Or maybe make an assumption that was perhaps right last year, not this year.
Yeah, and I think that for me would be useful for you to get Xero, QuickBooks, or whatever online systems to help you monthly monitor your income, your expenditure. And I trust me, you will make 15% more profit by doing so.
And save tax. So what we love doing with our clients, and we're doing it, for example, kind of between now and the end of March, is helping our self-assessment tax return clients look at their total incomes and expenses and forecast for the period April 21 through to the beginning of April 22. So in other words, the 21-22 tax year. We're doing that now because we want people to have a really good understanding of what their tax position will be at the year end, so they know how much tax they have to pay. But actually, it's not just about understanding the tax to pay. It's understanding, right, if that is going to be my tax bill, what do I need to do between now and the end of March to make sure that tax bill is either reduced or removed entirely? And it's about then deploying the tactics, because there are lots of things you can do. Your toolbox to minimize tax is much bigger in the tax year in question than it is after the tax year in question. So I definitely encourage you to go and talk to your accountants now. If it's part of the service that you get, it is for our clients. If it's part of the service you get, go and talk to your accountants now and start forecasting your tax bill for the 21-22 tax year, and then never be in the dark again on this. Same with your limited company. I would be definitely recommending 2 to 3 months before the year end of your company doing the exact same thing with your accountant, looking at your limited company accounts. Again, the toolbox to minimize tax is so much bigger in year than it is after the accounting year in question. So go do those things. And if your accountant doesn't want to do those things, go find an accountant that does. That's really going to help you. It's not about reporting what it is. It's about understanding what it could be and then doing everything you can to minimize it.